WolfStrike's a technology rentals company. We rent a range of technology products that retailers and businesses need to run their business. Those products may be point of sale systems, CCTV, security systems, digital signage and all associated hardware and software. What we do is we bundle all that up into a package which we rent to the merchant for a one-off monthly fee over a 36 or 48 month contract term. At the end of that rental contract term, we bring the equipment back, we clean it up and we redeploy it into another customer. The business is very simple. We've grown from about 700 customers to over 3,000 customers by way of both acquisition and organic growth, mainly in the New Zealand market, but we intend to do exactly the same in the Australian market. We've already got a beachhead here that we're working through, and there's opportunity to grow in this market as well. There's actually two opportunities. One is the New Zealand market, where our major operations are at the moment. We have about 3,000 customers in the New Zealand market. We've built that in about 2.5 years. Our rent book has also grown from nothing to about $8 million, just over $8 million. The opportunity in New Zealand is about 87,000 merchants, which is our target market, but Australia is really where we want to be. And the market in the Australian environment is about 427,000 merchants. So we don't need very much of that database to be a very successful business. We are already making revenues, we've got profits, we've got cash flow, so we're a solid business now, but the Australian market is really the opportunity for us. Without being arrogant about it, there actually isn't any major competitors in our market. It's a very fragmented market at the moment in both Australia and New Zealand. So we have a range of products, point of sale systems, CCTV, security systems, digital signage, a range of other products and services. There's a number of players in each one of those segments, but no one is doing what we're doing, which is bring it all together and offer it to the customer as a single package. There's also no one who provides the breadth of products and the value-added services in behind that we offer to the merchant. So we provide services that run on mobile phones, as an example, that will tie their customers into the merchant. And we also offer the service support and technology maintenance and behind it as well. So we've been compared to Silver Chef. Silver Chef provide kitchen appliances and that type of hardware for kitchens and hospitality sector. We've been compared to them as the technology front end. So our business model is almost exactly the same as theirs. We source a product, we supply a product, service, maintain it and deliver it, and we rent it to the customer over a fixed term contract. My background in history, this is my sixth business of this type of setup. Out of the first 5, 2 of those are listed on the New Zealand Stock Exchange. Recognised very early on that it's really about volume and growth. So we are in an acquisition mode at the moment. We've acquired 5 businesses in New Zealand in the last 18 months. We've amalgamated those together to give us a substantial customer base. We intend to do exactly the same thing in the Australian market. As I mentioned, it's a fragmented market. There is plenty of opportunity for small players to be pulled together into a standard sort of roll-up strategy. And that's what we intend to do. Look, fundamentally the business is well funded already. We already have funding lines for our rent book, and all our acquisitions have been undertaken using cash flows from the businesses to pay for their acquisition. So we don't require a huge amount of funds at this point in time. Saying that, the funding lines we get are at very high interest rates of around about 15% because it is mezzanine funding. So there is an opportunity to look at that going forward and reduce those funding costs. A much lower interest rate will add a huge amount of value to the bottom line. Additionally, we are looking at an acquisition strategy. As I mentioned before, it's simply a roll-up strategy using a fragmented market and bring it together as one. So there'll be opportunities to use that as well.